So continuing with the 2013 paper, we're going to do the final accounts here now, starting off with turnover. And our turnover is 2,040,600, from which we subtract cost of sales. Our cost of sales is 1,253,000. Remember, that's our opening stock, purchases, paid and dry write-off, and less closing stock. That gives us our gross profit. Of 787,000, from which we subtract our distribution costs. $240,040. Our distribution costs, remember, were the 194 from the trial balance, the depreciation on buildings, that portion, and the depreciation of delivery vans. And then we took off our administration expenses. $276,560. And they were made up of the 206,000 from the trial balance, the audit fees, depreciation of buildings, directors' fees, and that's 18,500 for discounts received that we were taking out of admin expenses. Then we had other operating income. $96,500. That was made up of rental income and royalties on payments and discounts received. So that brought us down into operating profit. And our operating profit is 367,500. To which we add our investment income. That was the 4,200 received plus the 7,800 euro due to us, giving us 12,000. And we had the already calculated profit on sale of land. We didn't have any calculations to do for this because the 80,000 is already in the trial balance. Interest on debentures, 10,000 euro. And that gives us our profit on ordinary activity before taxation. 449,500. And then we have taxation. Of 60,000. And that brings us to profit on ordinary activity after taxation, which is 389,500, from which we deduct our dividends. Just the one figure is 50,000. That gives us retained profits, 339,500, to which we add the profit left over from previous years. That's our P&L balance. Profit brought forward. On the 1st of the 1st. We add 85,000. That's profit left over from previous years. We know that because it's a credit entry in the trial balance. You need to be careful of that in case you come across a debit entry Remember, when you're reading a trial balance, debit assets, losses, expenses and costs. So if you find a P&L balance that's debit, that would be a loss brought forward. No, this is a profit brought forward from previous years because it's a credit entry. And that lets us then, with our profit, to be carried forward on the 31st of the 12th, that's the end of the year, 424,500. And that's the figure that will bring down into the balance sheet. So let's just have a recap on that there. In the earlier video, we've already calculated the breakdown of our cost of sales and distribution cost and admin. So we've got turnover less cost of sales gives you gross profit, less distribution cost and administration expenses, and then we added in other operating income. That gave us operating profit, to which we added investment income and the profit on the sale of land, from which we subtracted the debenture interest. That then led us to calculate our profit on ordinary activity before taxation. $449,500. From this we took off taxation, 60,000, profit on ordinary activity after tax, less our dividends. That gives you a retained earnings or retained profits. You add the profit and loss balance brought forward from last year, 1st to the 1st, and that gives us the profit and loss balance on the 31st of the 12th, or at the end of the year. And this will be our P&L balance for the balance sheet, which we'll go on to next.